This segment sponsored by Foster Financial. It is time for Wealth Wednesday, giving you the latest financial advice to help you midweek. And of course, joining me is Caleb Doan, the Vice President of Foster Financial. Hi, Caleb.
Hi.
Welcome.
Thanks very much.
Yes. All right. So we're continuing the conversation that we started before about end of year planning. And so remind us what we talked about last time.
Yeah. So last time we talked a little bit about Roth conversions, and I think it's kind of helpful to have this conversation about stuff that needs to be done by the end of the calendar year as opposed to the end of the tax year, which of course is next April, because I think the end of the year is kind of sneaking up on us.
It is.
It's still like 80 degrees this week, and we're in the first week of October, so I think it's going to catch a lot of people by surprise.
Right, it is. So this is perfect time to start planning ahead. And so what will we be discussing today?
Yeah, so today I wanted to talk about something else that has to be done by the end of the calendar year, which is tax loss harvesting. And this actually does not have to do with retirement accounts like 401ks or IRAs, but it has to do with brokerage accounts. And so these are accounts that are funded with just cash in your bank. So, somebody took $10,000 of cash in their bank, they went to a broker and bought $10,000 of Apple stock or something like that. So when that stock appreciates, it grows from $10,000 to $11,000, if you were to sell it, you have to pay taxes on the gain. But what some people might not realize is that if that stock actually lost value and you sell it, you get to take a tax deduction up to $3,000 each year, and anything over top of that you can roll over into the following years. And so one of the things we do is we take a look at our clients and we look in these taxable kind of non-qualified accounts and we say, hey, if you have some positions that have lost value, maybe we harvest the losses so that you get some sort of tax benefit from these positions as well. And so that's one thing we take a look at the end of the year and do for our clients.
Interesting. So you mentioned stocks. And so is this specific to stock accounts only, or was that just one of the examples?
Yeah, this is specific to kind of stock brokerage accounts. And so a common example that we'll see is, people will still want to hang on to that stock even if it's lost some value, because they expect, they're holding it for the long term. They expect that, in the long term, this Apple stock is going to recover. And so if you sell that stock, of course, you no longer have it for a period of time, but you can actually buy back into that stock more than 30 days later. So 31 days later, you can buy back into it and you can still write off that loss. And so one of the things we'll do for clients is, they'll say, hey, I have this Apple stock, it's lost $1,000 in value. I still want to hold it for the long term, but how can I get a tax advantage right now? And so we'll sell it at the $1,000 loss. Maybe we'll buy into Microsoft for 31 days. Then at the end of the 31 days, we buy back into Apple and they get to write it off on their taxes.
Interesting. And so this period of time to be able to do this type of harvesting, is this at the end of the year? Like, is there a cutoff when it comes to stocks and we are able to purchase them, sell them, and all of that?
So you can buy them and sell them anytime throughout the year, but in order to be able to use that deduction for your 2023 taxes, it has to be done by the end of the year, by the end of the calendar year 2023. And so a lot of times we take a look at it at the end of the year and say, okay, what do we want to position here to give our clients the most deductions on their taxes.
Wow. Okay. So this is very specific to those who own stock. And so how long would they have had to have it? So like, for example, we're in October. So if someone purchases stock now, would they have an opportunity to gain this harvest tax lost value at the end of the year?
Yeah. So of course the stock value would have to lose value for you to take advantage of this. So we never, purchase stock with the intention of doing tax loss harvesting. It's just kind of, if you hold a big portfolio of stocks, some of them are going to go up, some of them are going to go down in the short term. In the long term, we typically expect overall there to be growth, and of course there's fluctuations, but it's more of an opportunity to take advantage of a situation where some of the stocks have gone down. And you can do that with short-term gains, with long-term gains, or losses, and so we take a look at both.
Okay. Can you dive a little bit deeper about what may be involved? Maybe give an example, because I'm sure the portfolios that you manage are all different in different ways. So people may be wondering, will this apply to me? How do I really know? What's the test? So can you give another example of how this can apply to folks?
Yeah, absolutely. I think if people have a brokerage account, typically on their statement, their monthly statement that gets sent to them either electronically or in the mail, it'll show all the positions that they hold in their portfolio. And if they have a financial advisor, a lot of times they have, certain stocks that they typically buy for their clients. So, let's say there's 10 or 15 different positions in their stock account. You can look at the unrealized gain and loss on each of those individual positions.
Oh.
And any of the ones that show losses, that's an opportunity for tax loss harvesting.
Now, is there a max amount of this loss that you can take? I know you said up to 3,000, but
Yeah.
is that just for one, or can you do multiple stocks?
Yeah, so that's each year the total amount that you can write off for all the stocks is $3,000. But let's say you had a $10,000 loss. You can take $3,000 this year, $3,000 next year, the year after, and then $1,000 in the following year. So
Oh.
you get to carry forward those losses
That's
each
pretty
year.
cool.
Yeah. So
Yeah.
it can be a great tax advantage for people to take advantage of.
Yeah, so much involved. Again, reminding us why we need a financial advisor. So thank you so much, Caleb,
Yeah,
for
you
this
bet.
information today. And if you would like more information about your holistic financial planning, then be sure to contact Foster Financial. We'll have their phone number listed below, and we'll be right back. This segment sponsored by Foster Financial.